Hello everyone and welcome back. My name is Greg Furman, a market analyst here at TraderPlanet.com, and these are the market positions for January the 10th, 2011. Now, to get started for our first trade for today, we're going to be again looking at shorting the gold futures contracts. We were shorting this one I should say, last week in that 1624 area. Pretty good trade. We've been moving back and forth, up and down. You can see what's going on up here. The market is banging up against the Vantage Point 18-day predicted moving average. We've repeatedly failed at this level, and this level has been basically between that 1625, 1630, and then we've been falling back down towards the 1600 mark, maybe even a little bit lower. We can see here that I have the predicted short, medium, and long-term differences starting to flatten out. The predicted short-term difference breaking to the downside. Predicted MACD in oversold territory, but crossing the trigger to the upside. Now, point of interest here, we're still well below the zero line. We're still quite bearish on the predicted MACD. Our predicted stochastic, you can see I've worked in here. We're now hitting the overbought territory. Now, when I break down the key pivot area, 1616 is a key pivot area. Now what I want to do is look at the individual crossovers here from Vantage Point. Our first crossover comes at the short-term crossover. That's taking place right around this. It's starting to turn around right around that 1618 mark. Our medium-term crossover is still to the upside, and our long-term crossover is slightly to the upside. But again, our triple EMA cross is still saying we're holding to the downside. So from here, once we've made the determination which way we want to play this, we go in and look at our predicted high and predicted low. Now, looking at the predicted high and predicted low for tomorrow, we have 1619 and 1601. That's the range we're going to be dealing with for tomorrow. We can see that after 5 straight up days, our neural index is now turning down. Now, the benefit of this particular, looking at the neural index from this perspective, is we've had a multitude of up days, but then it's turned around and failed at that critical level pretty much on a daily basis and then sold off. This tells me that we're likely to see a bigger move to the downside on the gold contracts. Now, we are in the month of January. The first few weeks in the month of January, very volatile, but I don't see a lot of changes here. So we're going to stay with the primary trend, which is currently down. We're going to be looking to sell into that 1619 area, and then we're going to be targeting a move down to the 1600 mark. Now, what we also want to do is bring this up from the Vantage Point perspective to see how accurate the predicted high and predicted low has been. We can see for the last 3 or 4 days, it's been almost perfect, and it's been hitting the predicted high and hitting the predicted low and staying within this band. Now, you can see that this band is turning lower, and that's why we're looking at continually selling this trade, the gold, excuse me. Now, I've made this recommendation to my own clients on pretty much a weekly basis now for a while, and I think I would still be looking for a break well below that 1500 mark, and any move towards that 1700, I believe, will be met with considerable selling. Now, that's our first position for tonight. Now, our second position, we're going to be looking at the U.S. Swiss franc in the Forex market. Now, we can see that the market has come down and repeatedly touched the Vantage Point 18-day predicted moving average and continued to bounce off of this, unable to make a sustained break below the level of the 18-day predicted moving average. This currently comes in at 94.02. Now, we have some disruptions at the Swiss National Bank with the Swiss National Bank president resigning due to a currency transaction of all things that his wife made. Kind of humorous. That may cause some volatility in the Swiss franc, but I believe the primary trend remains in place to the upside here, and the peg on the Euro-Swiss franc will continue to hold, which should support this cross pair. So from here, we can see our predicted MACD, predicted stochastic still looking okay, mildly overbought, mildly. So I expect a retracement and some volatility. I'm going to break this down by crossover. We can see not even the short-term crossover has crossed to the downside. The medium-term crossover looking good, as is the long-term. We can then look at the predicted high and predicted low from Vantage Point, and we can see that we've repeatedly tagged the upper band. This red band is the Vantage Point predicted high, the black band the predicted low. You can see that we're not touching that predicted low at all. today, excuse me, we have actually touched that. I would expect a little bit of a pullback for tomorrow, but nothing big. So let's come into the daily report here and see what we have for tomorrow for our predicted high and predicted low. We have 94.58 and 95.47. That's the range we're looking at from the predicted high and predicted low standpoint. So your more aggressive traders can use the 94.58 area to get into your long. I would be leaning for a little bit deep, potentially a little bit deeper of a pullback, maybe towards the 94.20, 94.15 area. So your less aggressive traders, we've got lots of news coming out this week. It's going to be volatile. So, they can take a little bit less aggressive approach and look towards the 94.15, 94.20 area, depending on your risk appetite. But again, I think that longs will remain in place. Now, our neural index is pointing down, so we can expect a move to the downside, but I don't think it will be a significant move. And when it gets down there, we're going to use that as a buying opportunity. So with that said, these are the market positions for January the 10th, 2012. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.